Hey, what's up YouTube? I hope everybody's having a great day. In this video I'm going to cover how I don't let the government borrow my money for free. Yes, and in this video we're going to be talking about taxes, and I just wanted to go over a few things that I think will be helpful. A disclaimer, I am not a certified professional accountant. I'm not a CPA. This is not tax advice. This video is not to be used as tax advice. This video is just my own experience and should be used for entertainment purposes only. Make sure you seek a professional if you want tax advice. If you guys like this kind of content, make sure you smash the like button, subscribe. If you guys have questions, put them below, and let's jump right into it. So if you're an employee and you receive a W-2 form for your taxes, this information will be helpful for you. Again, disclaimer, I'm not a CPA. Do not use this video as tax advice. This is for your information and entertainment purposes only. Please seek a professional for your tax advice. A large portion of all Americans receive some sort of refund when they do their taxes. Now, this could be a lump sum of money. For some, it could be a couple of $100s. For others, it could be several $1,000s. So using the data from last year, the average American family received $3,536 as their tax refund. Now, that's a lot of money that could be used for different things, right? And people get excited when they do their taxes because they know they're going to be getting some money back. The purpose of this video is to give you a rough idea of how taxes are estimated and how refunds are received and why refunds are received. So let's go to the whiteboard and I'll break it down for you. If you haven't heard of tax brackets, I'm going to go over them real quick here. But basically, it's how does the IRS calculate how much taxes are you going to be paying? For a single filer, these are the breakdowns for tax bracket. So if you make between $0 and $9,950, you're going to pay 10% on that amount. Now, once you get over that $9,950 and up to $40,000, $40,525, you're going to pay 12% on that money, on the money that's in between these two amounts. And then as you go down the list, you can see that the higher your income is, the more taxes you're gonna pay on those brackets. Okay, now moving down to married people. So between $0 and $19,900, you're gonna pay 10%. Between $19,901 and $81,050, you're gonna pay 12%. 22% is for people who make between $81,051 and $172,750. And as we go down the list, you can see the more money you're making, the more taxes you're going to be paying. Let me give you an example on an average household income in the United States and what that looks like. Okay, so $67,521 is the median income. And we're going to break down for a household what type of taxes they would be paying. It's going to be a family that's married. So between $0 and $9,950, the taxes are going to be 10%. And then we're going to have between $9,951 to $40,525, we're going to pay 12%. And then we're going to have between $40,526 to $86,375, we're going to pay 22%. Okay, so these are the three brackets that are going to apply to this income. Now, one thing to consider is that when you're looking at income, federal government provides you what's called a standard deduction, meaning there's a certain amount of money you're able to deduct from your income, and that money will not be taxed. And standard deduction is what most people use unless people have a lot of itemized deductions. But most people use standard deduction. So for for somebody who is single, the standard deduction as of this year 2022 is $12,950. And for somebody who is married, the standard deduction is $25,900. So in this example, we're looking at a married couple, and we're gonna deduct right off the bat $25,900. So we're gonna take our $67,521 minus $29,900, and we get $41,621. So you can see that by applying the standard deduction, we are down to taxable income $41,621. Now you can see that we are still within the third bracket here, which is the 22% bracket. So let's break this down. Let's break down this income and how it will fit into our brackets. So the first bracket is $9,950. Well, we have that amount in the $41,000. 10% of that's $995. Then we're going to take and look at the difference between these two amounts. So we're going to say $40,525 minus $9,951. That gets us to $30,574, and we're going to multiply that by 0.12, 3,668, and then we're going to look at the last bracket that this applies to. Now we are making 41,621, so then we're going to subtract 41,621 minus 40,526, and that's going to be $1,095, and then we're going to take 22% of that, and that's going to be $240.90. Now we're going to sum up all of these amounts, and that's going to equal to $4,903.90. So this is how much money you're going to pay to the federal government if this is your household income and you're a married couple and you have no children. Now once you get into having children, then you get what's called child tax credit. But if you're a married couple and that's your income, this is the amount of taxes you're going to be paying. So where am I getting with all of this? When you have a W-2 job, there is a number that you select with your employer, and that number represents how much money they're going to be taking out of your paycheck. And what happens is, the lower the number you put in there, that means the more money they're going to take out of your each paycheck. And the higher number you put in there, that's the less money they're going to be taking out of your paycheck. So what people generally do is they just put in a lower number, and then that means that every paycheck that they're receiving, well, the government's going to be taking money for that taxes that are due. And then once your year is over, they're going to calculate and they're going to say, oh, well, you overpaid for taxes by $3,000 or $4,000 or $5,000, and then we're going to refund you your money. Now, for a lot of people, they like that because they can't seem to save money themselves. But statistically speaking, and this is why I think this is important discussion to have, because when I looked up what's the number one thing that people use their tax refund for, 2 out of 3 Americans use their tax refund to pay their debt. So they're not using this money to go on vacations, to upgrade their lifestyle, to invest into their future. People are taking this money and they're paying off debt. Now think about it. Is that logical? Why would you let somebody hold on to your money for a period of 12 months and then you get that lump sum? And instead, you could have access to that money every month and you can put that money towards your debt. But if you adjust this number on your employee and you say that I want the government to take out less money, well, now you have access to that money and you can put it towards your debt. Again, this is not tax advice. You need to talk to your CPA, you need to talk to your tax personnel for them to figure this out. And this video cannot apply to all, and it's not meant to be used as a guide to apply it to your own tax situation. Everybody's tax situation is different. But I know, speaking personally, I calculated myself how much taxes I'm going to be due for the duration of the year. So I figured out what my income is and everything I can deduct and everything I'm going to be taxed on. And then I divide that by the amount of paychecks that I get, and I calculate how much money they should be pulling out so that at the end of the year when I do my taxes, I am as close to $0 as possible. And that means that the government had their hand out of my wallet. I hope this makes sense. Hey, well, I hope you enjoyed this video. If you got something out of it, make sure you smash the like button, subscribe if you haven't yet. If you have any questions, throw them in the comments below. I will be releasing another video here shortly. We'll see you then. Have a good one, guys.